All right, let's get into a major investment showdown. In one corner, we've got an asset built purely from digital code. And in the other, an asset built from actual bricks and mortar. Yep, we're talking Bitcoin versus real estate.
So let's cut right to the chase. If you had to choose between the brand new world of digital currency and the age-old security of property, where should you put your money? That is the big question we are going to unpack today. To figure this out, we're going to treat this like a classic showdown. So first up, let's introduce our two main contenders. In this corner, you've got Bitcoin, the digital pioneer. It's a currency that basically lives and breathes online, no central bank in sight, which is why people call it digital gold. And in the other corner, we have the tangible titan, real estate. You know this one, physical property, land, houses, stuff you can literally go out and touch.
So to really judge this matchup fairly, we need to get a handle on what makes these two so fundamentally different. Let's kick things off with a couple of core concepts. First up is tangibility. I mean, it's pretty straightforward, right? It's the simple quality of being physical, of being something you can actually touch. Real estate is the perfect example of this. It's got real-world use because it takes up real space. You can live in it, you can rent it out, you can build on it. Its value is tied directly to the physical world.
Now, on the complete other side of the coin, you have Bitcoin's secret sauce, decentralization. What this means is that no single person or group, not a government, not a bank, is in charge. Instead, this huge global network of computers keeps it all running. And honestly, that's a pretty radical idea compared to every financial system we've ever known.
Okay, let's dive into our first round, volatility and risk. Here, we're looking at just how wildly the price of each of these can swing. Think of it as a crazy roller coaster versus a slow, steady climb up a hill. And wow, the difference here couldn't be more dramatic. Just look at that chart. Bitcoin's price can go on these massive swings, sometimes in a single day, all based on things like news headlines or just general market hype. Real estate, on the other hand, is way more stable. Its value moves much, much more slowly, usually over months or even years.
So what does all this mean for you, the investor? Well, Bitcoin is the very definition of high risk, high reward. Its value can be swayed by anything from a tweet to new government rules. Real estate is pretty much the opposite. It's a lower risk game focused on slow, steady growth that's tied to things we can track, like population growth and the local economy. And really, this all comes down to you. It's about your personal comfort zone. Can you handle the idea of huge gains one day and massive losses the next? Or do you prefer an investment that lets you sleep a little better at night? Your own risk tolerance is absolutely key here.
All right, moving on to round two, access and liquidity. In simple terms, this is all about how fast you can buy in and, just as important, how fast you can get your money back out. Let's just quickly define that word, liquidity. All it means is how easily you can turn your investment back into cold, hard cash without totally tanking its price. If something has high liquidity, you can get your cash fast. Low liquidity means your money's kind of tied up. And man, the path to actually owning these two things is just worlds apart. You can buy Bitcoin on an app on your phone 24/7, probably in the time it takes to brew a cup of coffee. Buying a house, though? Phew, that's a marathon of agents, lawyers, and stacks of paperwork that can easily drag on for months. So here's the bottom line. Bitcoin offers you incredibly high liquidity. You can sell it and get your cash almost instantly. Real estate is a long-term play. Your money is locked in, and what you're trading is speed for stability. So, after a couple of pretty intense rounds, where are we at? Well, it's clear there's no single winner here. This is all about you building your own investment playbook and picking the asset that actually fits your life and your goals. And when you lay it all out like this, side by side, you can really see just how different these two are. Bitcoin is digital, it's volatile, it's super liquid, and it operates outside of the old school systems. Real estate is physical, stable, but illiquid, and it works within all the established rules. In pretty much every single category, they are polar opposites. And that brings us to maybe the most important takeaway of all. The best investment isn't Bitcoin, and it isn't real estate. It's the one that makes sense for you. You know, a young investor might see Bitcoin's volatility as a huge opportunity for growth, but someone who's getting closer to retirement might prefer the steady income and stability of a rental property.
So, we'll leave you with one final thought to chew on. As you look out at your own future, which one of these ideas gets you more excited? Is it the thrilling, wide-open potential of a new digital world? Or is it the time-tested security that comes from owning a solid piece of the physical one? The choice, of course, is yours.